Welcome, this is Denome. This video is about Bitcoin white paper and how it looks like 12 years later. And we will take a look at the original white paper as well as the history of Bitcoin, what has happened, and where we are now and where we are headed. And at the end of the video, I will give you my review of how well the original vision has been implemented. And in this video, I will not go into detail of all the technical aspects of Bitcoin or how Bitcoin works and how blocks are added or anything like that. I just want to make sure that the original vision, how well that has been implemented. And why should you watch this video? If you are a crypto investor or you want to know more about Bitcoin or blockchain or cryptocurrencies, it is very important that you know the history of where we have come and where we are now and where we are headed, so you can explain it to somebody else. So if somebody asks you about Bitcoin and you know these things, it will make you look more professional as well, especially if you are investing into cryptocurrencies. And let's just jump right into the white paper, and then we will go to the timeline later. So this is the Bitcoin white paper, and you can download it from bitcoin.org. And it is created by Satoshi Nakamoto, who is an anonymous person or people, and we don't know his real identity. And he disappeared a little while after making this white paper and helping the Bitcoin community grow in its infancy. And at first here you can see that the Bitcoin is peer-to-peer version of electronic cash, and it would allow online payments to be sent directly from one party to another without going through a financial institution. So it wants to decentralize the transactions. And on the introduction here, you can see that they say that there's high transaction costs with the banking system, how it currently works, and it's hard to make small casual transactions. And currently there's no mechanism to make payments over a communications channel without a trusted party. And how their solution is to use cryptographic proof instead of trust. And they also give a solution to double spending problem. And what double spending problem is, I just want to briefly explain, because they explain it here, but double spending basically means this, that you have money on your bank account and you want to spend it. And how you can spend it is by sending it to another bank account, but the bank itself has to verify that the transaction has been deducted from your account and added to the other account. And so you cannot double spend your money. And with cash, it is very easy because it is physical, and when you give it to another person, you don't need a third party to verify the transaction because you just give it to someone else. But whenever you have e-cash or electronic payments, then you needed a third party. But cryptocurrency, Bitcoin blockchain, basically wants to solve that problem. And with transactions, they define an electronic coin just as a chain of digital signatures. So with blockchain, you cannot actually own Bitcoin like directly, but you can own the right to use that Bitcoin. So how you own it is basically with signatures. So the previous owner had made a digital signature that you now own the signature, and these transactions, they link to each other in an infinite chain of events. And here they talk about double spend again. So the only way to confirm the absence of a transaction is to be aware of all transactions. So all transactions are in the blockchain, and transactions, they must be publicly announced, and the participants or the network upkeepers or the miners or the nodes, they have to agree on a single history. So there has to be a consensus in the system as well all the time. So there cannot be any contradictions. There's only 21 million Bitcoin in the world, and you cannot double spend the money. And their solution for this is the timestamp server, which they explain here. And it works through proof of work mechanism. And they refer to Adam Back's Hashcash. By the way, Adam Back is the only person in the whole Bitcoin white paper that is a real person. So that's why some people think he is Satoshi Nakamoto. Of course, we don't know for sure. He has denied it himself. And here they tell how the blocks work, how transactions are added to the block, and how there's a nonce, which is just like a random number that these computers try to solve, and it gets harder and harder the more CPU power there is in the system to solve these blocks. So one block is added to the blockchain every 10 minutes, and it contains roughly 1 megabyte worth of transactions inside it. And current network speed is about 7 transactions per second, which is quite low actually in its current state. But here they talk about the network, and then they go to the incentive, and this is important. So the first transaction in a block is a special transaction that starts a new coin owned by the creator of the block. So there's an incentive for the miners to verify these blocks, and the initial money supply of Bitcoin is distributed through this transaction verification process. And the verifiers, they use CPU time and electricity to verify these transactions. And after a while, by the way, after they published the Bitcoin and it was up and running, it used GPU power as well. So that's just an upgrade that happened in the system as well. And an important thing here is that there's an incentive also to get funded with transaction fees. So the verifiers get money from making these blocks from the total supply, and also through transaction fees. And after all the blocks, all the Bitcoin have been mined, then there will be a transition entirely to transaction fees only. And this is important. So in this Bitcoin white paper, they always wanted to have transaction fees inside the system. And now there's a contradiction here in the Bitcoin white paper, because on the other hand, they want transaction fees here, but here they complain about the transaction costs of the current banking model. So that's quite interesting. And at the end of the day, when all Bitcoin have been mined, then there would be completely inflation free, which makes it deflationary. So that's design in the Bitcoin white paper. And they want to have an incentive to keep nodes honest, so they don't attack the system and try to gain or game the system. So it would always be more profitable to play by the rules. And this is basically the security side as well. And then we can go down here. This is the technical side also. You can read it on your own time. But now we go to the privacy. So the traditional banking model achieves a level of privacy by limiting access to information. But then you have to trust a third party with your information. And to remove that need, privacy can still be maintained by breaking the flow of information. And how they do this is by keeping public keys anonymous. So each transaction here, let's go up here, you can see that a transaction, it has the public key and it has a private key. So the public key is basically the address, the Bitcoin address, and the private key is your password to the ownership. So you can, with the private key, you can access the funds that are held by the public key. Public key is just the Bitcoin address, basically. Where were we? Here. So they keep the public key anonymous, so the address is always anonymous. But there's a security flaw here, which is that a privacy flaw, because here you can see that the public can see that someone is sending an amount to someone else, but they cannot see that who is the owner of the public key. But now they have blockchain analyst companies that track these Bitcoin transactions, and based on the transactions, because they are publicly announced, you can see all the transactions, all the recorded history is on the blockchain. So based on the behavior of any address, they can basically guess who is the owner. And the more activity one address has, the more easy it is to determine who is the owner of any address. So that's a privacy flaw over here. Or I'm not sure if it's a flaw or not, but it is not mentioned in the system. So if they want to have more privacy, then that's an update that needs to be taken care of. And then they have calculations how hard it is to actually attack the system. And since these 12 years, it has never really been hacked through this kind of an attack. So I'm sure it's good enough. So we don't need to know about this if we are just an average investor. But as a conclusion here, you can see that they want to propose a system for electronic transactions without relying on trust. And they want to prevent double spending. And they have a proof of work system to record a public history of transactions in the blockchain. And they use CPU power to verify the transactions, and they can vote, the miners or the nodes, they can vote with their CPU power. And here they say that if you want to make any rules or any needed rules and incentives can be enforced with this consensus mechanism. So basically the nodes, they can vote with their CPU power on the changes on the blockchain and updates. So that's important as well. And here you can see the references. So you can read this whole thing on your own, but here were the most important things. Now let's just take a look at the history of Bitcoin as well, and then we go to the aspect how well these have been actually implemented. So this is the Bitcoin timeline, and if we start from the beginning, you can see here that 2008, August 18, bitcoin.org was founded, and then October 31st, white paper was released. So this paper was released October 31st, 2008. And already on January, the first Bitcoin block was mined, and it was the Genesis block. And this is the message that was embedded in the first block. So it cites that a chancellor on brink of second bailout for banks. So this was a news headline. So basically this also suggests that Bitcoin was made to combat the financial system. But it's not on the white paper, so it doesn't say anything about, this white paper, it doesn't say anything about Lamborghinis. So let's just get that off the table. It doesn't say anything about going to the moon also. And it doesn't say anything about using Bitcoin for trading purposes or financial services or anything like that. It doesn't say. It just says about being electronic cash. So that's for the white paper as well. But let's go to the timetable again. So May 2010, first pizza was sold, or the first real life item. So in Bitcoin forums, somebody posted that he's willing to pay 10,000 Bitcoin for 2 pizzas, and somebody was able to actually do that for him. So that was the first real life transaction on May 2010. And then we went forward. Oops, sorry about that. Here we go. So August 6, 2010, there was an exploit in the Bitcoin system where Bitcoin actually went down for a few hours, because there was an exploit where you were able to create infinite amount of Bitcoin, and somebody actually exploited it and they fixed it after a few hours. So after this, I don't know if Bitcoin system ever went down after this one. I don't think so. I think this was the only time that the network actually went down. And then they had constant updates all the time. By the way, if you want to look at the updates, you can go to bitcoin.org/en/version-history, and I will link this down below. So you can see that Bitcoin has always these updates going on, and I read through all of them, and the latest update is in July 2020. So there's still updates coming through. And let's get back to the timeline again. So the 2013, BitInstant and Mt. Gox were the first exchanges that grew in popularity. And there was also the Silk Road website, which allowed you to use Bitcoin anonymously to buy anything in the world. And very quickly it became a place for buying drugs and guns and that sort of things. And of course, CIA was very, very interested in this. So they basically took down the Silk Road as well, and the owner of BitInstant as well. And that's when Bitcoin started to have more regulations as well. And at this time, the Satoshi Nakamoto basically disappeared as well. And 2014, we started to have more regulations, and Mt. Gox went down as well. So there was an exploit in the Bitcoin system, which was the malleability of Bitcoin transactions. And that's allegedly the reason why Mt. Gox finally went down. And what happened was the hackers were able to steal money from Mt. Gox. Let's go to the white paper again here. So This is the transaction here. So with when the digital signature was here, you were able to mutate the transaction when it was broadcasted to the network before it was verified. So miners were able to change the recipient of the transaction. So that's some reason that some people say that Mt. Gox was the reason that they were hacked and money were stolen from them. But some people say that they stole the money, but we don't know how actually it happened. But 2015, SegWit update was proposed, which basically took the signature out of the transaction and broadcasted the signature elsewhere, which took away the possibility for malleability inside the transactions. So once a transaction had been broadcasted in the system, you could no longer make any changes to the transaction afterwards. And also the block size became a little bit smaller, which allowed more transactions happening inside one block. So it improved scalability and it improved security as well. And this was the biggest update in Bitcoin after its inception that I know of. And 2017, before SegWit was implemented, there was a hard fork in the system because some people, they wanted the SegWit 2x happening and some people wanted the SegWit, and some people didn't want those. So that's why we had Bitcoin Cash. And Bitcoin Cash is a little bit from Bitcoin. I'm not going to go into that, but then Bitcoin Cash forked into Bitcoin Satoshi Vision as well. So that happened in August, and in the later that month, SegWit was updated on the Bitcoin core network. And then 2017, we had the massive bull run, and the developers, some of them wanted to update the SegWit 2x update as well, but it eventually failed. So this would bring the transaction fees even lower and bring more security in the system, but it failed with the consensus mechanism. So again, there's conflict of interest here in the Bitcoin white paper. So here it says that they were, as I understand it, they want to bring the transaction costs down, but the miners, they have an incentive to get money from the transaction fees. And the miners, they have the computing power, so they get to decide what they want to do with the blockchain network. So the miners have an incentive to have higher fees. So that's an interesting point to take here as well. And 2018, we had Bitcoin futures. So now we started to see the financialization of Bitcoin, because now we had the futures, which allowed shorting Bitcoin. It allowed to have leverage on Bitcoin, and now Bitcoin leverage trading and futures is basically the biggest use case for Bitcoin as of now, since 2018. And 2019, we had a very interesting development as well, because there's a scalability issue with Bitcoin currently, because it is only able to do 7 transactions per second. And they have tried to do these updates, and they sometimes have these, it's hard to get everybody to approve on updates before they can happen. So there was a group that started to bring Bitcoin on Ethereum. And how it happened was through wrapped Bitcoin. And what is wrapped Bitcoin WBTC? It is basically you used Bitcoin as a collateral in a smart contract, which prevents you to use Bitcoin in anywhere else. You cannot use Bitcoin that is used as collateral on the Bitcoin network, but you can then mint a token called WBTC, which is an ERC20 token, and use it on the Ethereum system. So you can now, there's an increasing number of Bitcoin on Ethereum as well, using the wrapped BTC. And now there have been more and more developments on this one, and the most recent one is REN BTC, which is a more decentralized version of wrapped BTC. So REN BTC allows you to use Bitcoin on other blockchains as well, other than the Bitcoin network. And this is a good improvement on the scalability of Bitcoin as well, because if you can use Bitcoin on other blockchains than the Bitcoin blockchain itself, then the 7 transactions per second is not as big of an issue. And 2020, now let's just take a look into the future. So we still haven't implemented Lightning Network, and which brings more security and scalability to the network as well. But security of Lightning Network update is actually questionable, because with Lightning Network it is like a on top of chain update. So you can use the Bitcoin security to make these transactions. It would basically mean that if you have a wallet that has assets inside Bitcoin, with Lightning Network you are able to transfer money inside that wallet. So it would not be broadcasted on the blockchain network for the transactions, and people who have access to that multi-signature wallet on the Lightning Network, they could make transactions between themselves. But if they wanted to make a transaction outside the Lightning Network system, then they would have to go broadcast it on the blockchain. So it hasn't happened yet on Bitcoin network, but it would allow these faster, more cheaper transactions outside the blockchain transaction system. It's an interesting update. I'm not going to go over to the other updates, but Schnorr and Taproot also want to improve the security and the scalability and privacy as well. CoinSwap is another update also that was suggested like again 1 or 2 months ago, which would allow you to teleport Bitcoin on the blockchain as well. And then we have other layer 2 solutions like Bitcoin on Ethereum or Bitcoin on EOS or Bitcoin or whatever blockchain. So these developments are coming. And key thing to note here is also that Bitcoin was never supposed to be digital gold according to the Bitcoin white paper, but the first block that had the complaint about the money printing basically suggests it could be a digital gold. But trading Bitcoin was never supposed to be the use case based on the Bitcoin white paper. So if we take a look at how well Bitcoin has actually performed on its original vision, I chose these categories. So I didn't choose trading, I didn't choose digital gold, and I didn't choose getting you a Lamborghini. So first is no third party. I would give this an A, because you don't need a third party solution to use Bitcoin currently. And double spend problem, I would give an A also. And low cost casual transactions, fast transactions, I would give a D, because this one I don't think is good. You have to pay $1 to $5 for transactions sometimes, and the transactions are not really that fast on Bitcoin network, because there's only 7 transactions per second with the current system. And privacy, I would give a B as well. And the reason is you are able to use these blockchain analysts and artificial intelligence to determine the owner of an address the more use an address has been used. So that's why I would give it a B and not an A. And the security, I would give a B as well. I would give the security of Bitcoin A if you know what you are doing. But for the average user, most people use a third-party service for their Bitcoin, or they use a wallet where they have to store their private keys, or they can lose access to those keys. They can lose access to the funds. So the average user, I would just give the security a B, because it's not an easy solution. So if you know what you're doing, it's an A. If you are an average person or an advanced person, I would give it a B. And for total system, because the number one reason to make Bitcoin was to become electronic cash, I would give it a B minus as well, because the transaction fees are high. There's a delay in all the transactions. So if you want to use cash, it has to be instant. So for that reason, I will give it a B minus for the original vision of Bitcoin. But it could improve with these updates and layer 2 solutions that are coming to Bitcoin as well. So this is overall, I believe in Bitcoin future. I think it's an amazing development, and good things have happened, and the updates are very constant on Bitcoin network and on other blockchains as well. So I think this is going to be a future of the Bitcoin. It's going to look very, very good. If you like this content, hit the like button, and if you like to see me explain how you can get passive income with cryptocurrencies, you want me to take deep dive research into different protocols, or you want me to talk about macroeconomics, I do that on this channel as well. So subscribe for more if you want that. You can join my our Telegram group. It's in the description as well. And if you have any comments or thoughts, or you disagree, put those comments down in the comment section. I will answer those, and let me know if I missed something, if I said something wrong, or you have a question, or you just want to say hi. Put them down in the comment. Yeah, that's it for this video. Thank you for watching, and I will see you on the next video.